Okay, good afternoon, everybody. Today's webinar is about a vitally important issue with further details. Of course, we've been waiting for clarification for a few months now on exactly what these HST rebates, reductions, whatever you want to call it, what they actually mean and how they're going to work. The first thing I want to do is thank our partners, Aird Berlis, on this, in particular, Angelo Gentili and Kyle Spampanato. The last time we had a webinar, they did a terrific job, and I'm looking forward to what we're going to see today. And we will be posting the video of this on our website. So if anybody missed it, just let us know. We'll have it on LinkedIn as well, too. I want to thank the RESCON team as well for their perseverance in pursuing this, especially over the last few years. With respect to HST and other matters concerning housing supply and getting supply moving again. So with that, I'm going to turn it over to our coordinator here, and we'll get going. Thank you.
Okay, everyone, thank you for joining us today. It seems like only yesterday we presented to you about these rebates, and in fact, March 31st, it wasn't that long ago. But boy, a lot has changed. Not that we have even newer rebates, but now we have legislation and we have details, and I think that's what you're all here for today. So, welcome. Just to introduce ourselves, in case you didn't have the pleasure or displeasure of hearing us speak back on March 31st. My name is Angelo Gentile. I'm a partner in the tax group at Aird Berlis. Presenting with me is Kyle Spampanato, my partner in crime. We are indirect tax specialists, and uh, I see a note, the name is covering the lawyers' faces. Just wondering, is there a technical issue? Is everyone able to hear and see us?
Yeah, it's fine on my screen. So I guess for that person, you can just zoom. But
Okay,
I think from what I can see, Meredith, jump in if I'm wrong, but you look pretty good to me, Angela, so far.
Everything looks good on my end as well.
excellent. Excellent. Okay, wonderful. So I'll continue. Just wanted to make sure everyone could hear and see us clearly. Um, as mentioned, please, I want this to be a presentation where people are free to ask questions. So please do use the Q&A function. We will leave as much time as we can at the end of this presentation to answer your questions. And just to situate us in terms of like what we're going to do today, Kyle, if we can move to the next slide. We're going to first talk about, you know, an overview of our landscape, the rebate landscape today. Just so you know, we're not going to rehash the subjects that we went through in depth on our March 31st presentation. I don't think that would be very productive. Some of the stuff we're going to overlap, of course, but more by way of introduction. But I want this to really focus, the focus of this presentation will be on the Ontario first time homebuyer rebate and the Ontario temporary enhanced new home rebates. Okay, those are the two that we're going to really focus on today because that's where new legislation or regulations have come out over the past 2.5 to 3 months since we've last presented. And then once we discuss that, we're going to discuss some takeaways for you as builders or as advisors, things you need to be aware of, and then we'll open it up for questions. Okay, so where do we stand today? How many rebates do we have? Um, uh, we have far too many rebates to count, practically speaking, because there's new rebates for owner-built homes. There's so many permutations of these rebates. And each rebate has their own special acronym, which you're going to love. What is new? So if you've learned nothing else today, if you retain nothing else from this presentation, what you need to know is that all these rebates are now law. Okay, that's that's your high level takeaway. You can log off now if you wish. Just kidding. Um, all these rebates are now law. Okay, but we're still, importantly, we're still waiting on some forms. Okay, with respect to the Ontario temporary enhanced new housing rebates. Okay, those forms are expected mid to late July of 2026. Okay, we're going to get into what that means and what forms are we talking about. But what's important to know is that these rebates are now all in effect. And what rebates are most relevant? What are we talking about? If we can move to the next slide, thank you. We're talking about, first of all, which you're all very well familiar with, the legacy new housing rebate, the one that caps at 24,000 in Ontario. Okay. Um, that's always been in effect. We still always have the legacy new residential rental property rebate. Okay. That's always been in effect. Nothing changes on that end. We talked about this on the March 31st presentation. You know, we have the enhanced purpose-built rental rebate that rebates 100% of HST for qualifying purpose-built rental buildings. Okay, we're not going to focus on that during this presentation. Nothing new has changed on that front, legislation-wise. And then these are the two ones that we're going to discuss really today. The first-time homebuyer rebate, which is now in full force and effect, even with respect to the Ontario portion, and the temporary enhanced rebates. Okay. And with respect to the Ontario temporary enhanced new housing rebate, there's really two components that we're going to focus on. And Kyle will, in the course of his portion of the presentation, take you through the mechanics of it. There is the federal GST HST rebate and then the provincial top up. Okay, there's two distinct mechanisms at play with these Ontario temporary enhanced new housing rebates. So this is some of the legalese, and I put this here not because I expect you to memorize this or to even care, but for some advisors especially, this is important to know, you know, what the source of the legislation is, what the source of the regulations is. So as a starting point, okay, and I put this like sort of in two slides here to lay it out neatly. Bill C4, the federal Bill C4, that was the legislation that enacted the first time homebuyer rebate that received royal assent on March 12th of this year. Okay. But that only dealt with the 5% portion. Okay. There was still nothing in place for Ontario at that time. Then you fast forward. Okay. We did our presentation on March 31st. And then what happened after that? Bill 114. That was the HST Relief Implementation Act, Residential Property Rebates 2026. Okay, this is an Ontario enactment. All right, so now it gets a bit confusing. That received royal assent May 12th in 2026. And what that did was it amended the Ontario Retail Sales Tax Act to give the mechanism for Ontario to pay or credit the relevant rebate um, on the 5% federal component of HST once the temporary enhanced rebates were enacted federally. Okay. It's insane. It sounds insane saying this. We have legislation where Ontario is talking about rebating or crediting the 5% federal portion of GST. You heard that correctly. Exactly, clear as mud, as one of the guests has rightly has rightly commented. Stick with me though, okay? Next, we fast forward to May 29th of 2026, and we had the regulations putting in place the Ontario component of the first-time homebuyer rebate. Okay, so as of May 29th, 2026, the first-time homebuyer rebate can now be credited in full for anyone who actually does qualify. Very restrictive rebate, okay? But for anyone who does qualify, the legislation is now in force. And we'll get to the mechanics shortly. We can flip forward. Fast forward to June 12th of this year. and we have the regulations amending the new harmonized value-added tax system regulations number 2. That dealt with the new rules concerning the Ontario temporary enhanced housing rebate, the provincial component, okay? And then finally, you have Ontario Regulation 196-26, okay? That gives effect to the 5% federal top-up component from Ontario. And this is Ontario legislation again. Okay, so those 5 enactments, okay, together is what basically gives the foundation and the basis for both the first-time homebuyer rebate and the temporary enhanced housing rebate. Okay, so now that we got that unpleasantness out of the way, let's move forward now to things in plain English. So the Ontario first-time homebuyer rebate, okay, we put the acronym FTHB throughout the presentation. It's basically mirrors the federal first-time homebuyer rebate, which we presented on back on March 31st. Okay, all it does is it provides the mechanism for the Ontario component. So if you qualify federally, you're going to qualify for Ontario if it's an Ontario property. You claim this rebate on the revised form GST 190. Okay, so that form's been revised, and that's where you claim it. And then there's the Ontario schedule. Okay. In terms of the requirements, just very briefly, you need to meet the conditions of the existing legacy new housing rebate. You need to have an agreement of purchase and sale entered into on or after March 20th, 2025 and before 2031. And you need to be a first-time home buyer, okay? And as we went through in detail in our last presentation, this is a tough rebate to apply for, to qualify for rather. It's easy to be at least 18 years of age and a Canadian citizen or permanent resident, but the key is the individual did not occupy a home owned by them or a now spouse or common law partner inside or outside Canada as their primary place of residence within the last 4 calendar years prior to closing. Okay, so it's neither you nor the current spouse or common law partner, and current meaning current as of the time of closing. Okay, so it could have been someone who you weren't married to or common law partner with before, but at the time of closing you might be. So that is a tough rebate to qualify for, but those are the requirements just in summary. And if we could flip forward. One of the questions I get asked probably twice a week, I would say, from clients, other advisors is, what if we have someone who has an agreement and we did this, that, or the other, and we entered into a new agreement? Well, there's some cases are okay and others are not. And there's anti-avoidance rules for this rebate, for the first-time homebuyer rebate, for purchase agreements entered into before March 20th, 2025. Okay, that's in section 263.4 of the Excise Tax Act. All right, so this covers assignments or requests to cancel existing agreements and enter into new ones, right? And I don't want to leave everyone with the impression that it's all bad, you can never do anything. I mean, there's legitimate reasons deals die, and then the same purchaser can come back in legitimate circumstances that won't necessarily be an anti-avoidance situation and enter into an agreement. But there are these rules in place, and you can bet that the CRA will review them and likely enforce them to the extreme. That's just the way we've seen it in practice with these rebates. CRA tends to take a very restrictive view of things because these are relieving measures, right? They're expensive relieving measures for the fisc if you think about it. And then, as with the legacy rebates, we put this as a caution. The builders will continue to be jointly and severally liable if they credit this first-time homebuyer rebate to the purchaser in situations where the builder ought to have known that they didn't qualify. Okay, hard for a builder to know that a person didn't occupy a home within the past 4 years outside of Canada, for example. Like, I mean, that will be almost impossible for a builder to independently verify. But at the very least, you need to have contractual protections and statements and statutory declarations that the purchaser makes to certify that they meet those conditions. And then if you have no red flags or reasons to think that they don't qualify, I mean, as a general proposition, unless you have any reason to doubt their word, generally it's okay to take their word, but you need to be cautious about that. So we have this slide just summarizing what the result will be if the first time home buyer rebate applies, right? If the unit's valued at $1 million or less, it's the full rebate, the full HST is rebated. If it's valued between 1 and 1.5 million, then the rebates are phased down. I'm not going to get into the specific mechanics of it, but it's there on the slide for you to refer to. There's formulas out there as well in the publications by the CRA. And if the unit is valued at above 1.5 million, then the first time home buyer rebate is basically phased out and you just get the legacy rebate. Okay, the one that existed always before. I've gotten this question a number of times, and so I put this in a slide. Can a builder tell the purchaser to seek the first-time homebuyer rebate themselves if in doubt? The answer is yes. Okay, yes, you can. So you can have a situation where the builder credits the legacy, the max 24K rebate to the purchaser as part of the agreement, part of the closing, and then the purchaser can apply on their own for the additional portion of the rebate over and above the 24K that they would be entitled to if they qualify for the first-time homebuyer rebate. They would apply themselves using the same form. I know a lot of people have asked me this question before. Won't the CRA get confused? There will be two different rebate claims for the same property. The answer is, the CRA is ready for it. In fact, the CRA gave a presentation about the first-time homebuyer rebate, and actually, they mentioned this. This is okay. It's contemplated as part of the forms and it's part of the process, so they're ready for it. You need not panic about that. So I just want to make everyone aware of this. And so now what I'll do is I'll turn it over to Kyle, who will take us through the nuts and bolts of these Ontario Temporary Enhanced New Housing Rebate, probably the thing that all you are here for today.
Thank you, Angelo, and welcome everybody. I know it's been a long time coming. We were talking about this rebate what feels like yesterday, and for Angelo and I, it has been yesterday and today and every other day since the announcements, especially since Bill 114 came out and people eagerly awaiting for further news on how the Ontario Temporary Enhanced New Housing Rebate would operate in practice. And I think there was some skepticism over whether this rebate would ever come to fruition, and I think rightfully so, given some of the promises and the amount of time it took for it to be enacted. But without further ado, I'm going to attempt to steer us down the road and explain to everybody here today how this rebate is going to operate in practice, the mechanics behind it, and as well as some of the things that Angelo and I both feel that people should be acutely aware of, and how some of those things might be of concern to some of the transactions that we are contemplating or intending to undertake in the near future. And before I go on to the next slide, we will talk about bulk purchases as well, just to give everyone some clarity around that. So the Ontario Temporary Enhanced New Housing Rebate, it does sound like a mouthful, and it is. So it's intended to be a rebate of general application. In addition to the first-time homebuyer rebate, this has become maybe the go-to rebate for a lot of people looking to purchase existing housing supply. And in that regard, it's just because it's a more flexible tool than the first-time home buyer rebate, just because the differences in the criteria in order to meet the rebate, as well as some of the other mechanics behind the rule. So as with the first-time home buyer rebate, the ENHR builds upon the existing rebate rules. So we're looking at, when we talk about the existing rebate rules, we're talking about the new temporary homeowner rebate and the new temporary residential rental property rebate. And this particular rebate is very interesting because there is two streams, and we'll get into that. It's a fairly layered set of regulations. But it effectively is to extend the temporary enhanced rebates to these two streams. So the streams being individuals purchasing to use homes for on their own behalf, or owner-occupied builders, which we won't talk about in this particular session, but something to be aware of. But also to extend this to landlords and investors, which is where it falls into the new temporary residential rental property rebate stream. So going into the layered legislative design, the temporary 2026 enhancements act as a mathematical modifier rather than a structural replacement. So by this, I mean it is just increasing the caps that previously existed so as to allow this rebate to operate to a broader set of people. To qualify for any enhanced rebate, claimants must first clear all the historical black letter ETA requirements. And so that is something to be aware of as we sort of navigate through this, and I'll circle back to it. But in order to benefit from these new rebates, one must meet the requirements of the underlying rebate in which it is extending. So primary residence gate, this is probably the most important part of this particular rebate scheme. The home must genuinely serve as the buyer's primary place of residence, or that of an immediate designated relation. This is not any different than what we've seen in the past with other rebates. However, I think it is worth mentioning just because of the quantum of the particular rebate, and so much more hangs on this particular requirement, especially when the operation of the rebate is so dependent on the occupation in order to get you within the rules. And then there's the subtraction mechanic. So statutory formulas to calculate the enhanced total first, and then subtract legacy claim values to prevent double dipping. By this is just legal jargon for me to say that the standard rebate effectively continues to apply concurrent with the new rebates. The legacy rebate effectively gets subsumed into the new Ontario temporary enhanced new housing rebates. And the formulas under the ETA and its associated regulations clearly are designed to ensure that we're not double dipping. So you can't claim over what I'm going to say is 100% of the GST, HST, otherwise executable. So you're not claiming 130,000 plus 24,000, which I think has become a common question. And I'm assuming that's just because of initial readings of the rules, or that might have contemplated that these two rebates are both remain eligible. And so just to kind of correct that, you do still qualify for the legacy rebate. The legacy rebate is a precondition to the enhanced rebate again, but the enhanced rebates are mathematically computing that legacy rebate into the new GST, HST caps. So going into the purpose of the particular rebate, this is something we're all probably familiar with at this point, but just to revisit, the rebate is designed to improve housing affordability by eliminating or reducing the GST, HST. As we've seen with the first-time homebuyer rebate, this is a similar purpose. There are some other collateral purposes, which we'll talk about, and maybe they're not so collateral. They're at least in my opinion, they seem to be the primary drivers behind this particular rebate. But one of those collateral purposes would be to stimulate construction within Ontario, just because of the slowdown in the real estate market, and it's looking quite dire. But it's also to assist builders with navigating current market conditions to stimulate sales of current inventory. And I think you really see this in the actual drafting of the rules. Some of the language is noticeably different from the first-time homebuyer rebate, and it is effectively showing that this particular rebate is intended to address the existing housing supply that isn't moving. So, as Angelo rightly pointed out earlier, this new rebate scheme, due to the nature of the enactments, effectively function as two rebates. And if you add in the legacy rebate, it almost feels like 3. I know that is confusing. It was confusing for us to navigate the rules. It is a little strange when you have the province legislating with respect to the federal component of the GST HST, and then you have the federal government legislating with respect to the provincial component. And this has created a number of issues, which we will see as we go through the presentation. So really, it is 2 parallel regimes operating in tandem. So you have the provincial regulations, the 5% federal top-up, and the federal regulations, a provincial component. Then there's 2 program administrators, and I know this is going to sound even more confusing. Generally, when we're dealing with these rebates, we're going to the CRA, and we're hoping the CRA is in a good mood that day, and they're going to provide us with the necessary rebates. However, in this case, we're relying on 2 program administrators. So we're relying on the province of Ontario, so the Ministry of Finance, which many of the builders in this room will be acutely familiar with dealing with on the land transfer tax side, and then the Canada Revenue Agency. And these 2 ministries are, these 2 administrators are effectively operating the existing regime together in collaboration, which I will get into a bit further. So for our purposes, 2 streams. You have the individual purchaser stream. This is effectively the extension of the legacy rebate under Section 254 and 256.21 of the ETA. And then you have the landlord or the investor stream, which is intended to extend the rental rebates to a greater pool. So preserve statutory definitions of the ETA that remain important for our purposes. Builder, I think that is very important to the proper functioning of the scheme. So the vendor must meet the strict legal criteria of builder to validate any underlying rebate claim. This is particularly important when it comes to the assignment of the rebates. On the legitimate sale application, transacting parties cannot artificially manufacture a purchase transaction. There must be a real transfer of ownership. So you can't just engineer a scheme in order to take advantage of these rebates. And this is more directed at persons who are looking to take advantage of the rebates for maybe perhaps to benefit from the rebate. But the first occupancy requirement, going back to this is very important. So this goes back to the legacy rules. It requires that individuals or designated relations be the first individuals to occupy the home. And I think this becomes particularly important to some of our clients who, in order to assist with selling some of their projects, have created separate residential rental suites. Now, that particular requirement isn't just important to the proper functioning of the rebate, but it's also going to be important, and your agreements are going to have to expressly contemplate that any leasing of the particular new housing supply must only occur after first occupancy by the individual or a designated relation. And I think that's really important, and definitely important where there's the ability to market a component of the existing housing supply. So track 1, individual owner occupiers, applies to natural persons. So this is going to expressly preclude corporations from taking advantage of this. So corporate investors, this is not the part of the scheme that's going to apply to you. But this is the part of the scheme that's going to apply to a lot of the individual purchasers who we're going to deal with. So simplified closing adjustments, direct assignment is allowed in these circumstances. Effectively is to enable buyers to offset the upfront purchase price without paying out-of-pocket tax. Perhaps the only word of caution with this particular scheme, and we'll get into it shortly, would be that we're still dealing with a large quantum of GST, HST. And so similar to the first-time home buyer, you can have the legacy rebate assigned and have the purchaser seek the new rebates directly from the government. Now, the problem with that is one, from a customer service perspective, whether it's going to make the project marketable or competitive with other projects. And what we're starting to see is a lot more builders being more amenable to extending those the full $130,000 of rebates to their clients, contingent on a number of additions to their agreements to protect them from any reassessments. So track 2, landlord investors. This is operating under the new subsections 47.3.1 to 3.3 the federal regulations. So 47.3.1 is effectively the requirements in order for the rebate to operate. So this is going to be like the dates in which you have to enter the APS, substantial completion, as well as closing and payment of tax. And then 3.3 is actually the computation. So one of the important things to know, and this applies to retail investors acquiring individual units to put into long-term rental market, will be the mechanics for how this rule operates, which I will get into. But there's an immediate cash flow barrier. So builders are legally precluded from taking assignments of these investor rebates. So it requires gross closing funds followed by post-closing CRA in Ontario claims by the investors. What do I mean by the post-closing CRA in Ontario claims by investors? Well, because the program is administered by both the Ontario government through the Ministry of Finance and the Canada Revenue Agency, the Canada Revenue Agency is the person or the entity that's going to be receiving the rebate applications. And as part of that rebate application, they send it to the Ontario government. And so that 5% top up is going to be paid by the Ontario government. And I think that's a really important part of the scheme that I'll discuss in further detail shortly. But something for you to keep in mind that when you're navigating these new rebates, it's not as clear cut as one would like to think. And there's a number of moving administrative pieces that might impact the overall reversion of and how quickly you get the rebate payout from Ontario. So moving into the individuals, built on the existing legacy rebate. Conditions for the rebate, one, agreement to the APS must be entered into between April 1st, 2026 and March 31st, 2027. So that 1-year period that we discussed in our previous session and the one that has been announced on a number of occasions by the government, that hasn't changed, that hasn't been amended, it has not been extended at this time. The construction commencement date. So construction of the home must begin on or before December 31st, 2028, and must be substantially completed on or before December 31st, 2031. This is important. Builders should certainly take note of the construction commencement timelines as like we're already halfway through 2026. If this becomes certainly important if we're looking to take advantage of the rebate to market existing or proposed projects. So the acquisition intention, this is important. I think this is actually very important to most rebates, but certainly important to the individual rebate is the purchaser must acquire the home for use primarily as a place of residence by them or a relation, or as a new residential rental property. That remains part of the requirement of the scheme. I think importantly, similar to the old legacy rebate, that acquisition intention is being ascertained at the time of entering into the agreement. So this is a little different than what's being proposed for the first-time homebuyer rebate. And part of the reason why I think this is more of a rebate of general application, because you're not looking first at the time of entering into the agreement, and then again for the purposes of determining the first-time homebuyer rebate at the time of closing. This particular requirement here only is looking at the time that you enter into the into the actual transaction with the builder. Now, of course, facts that happen after entering into the agreement may play a part in how you determine intention at the time of contract. But I think this is still an important thing to recognize that this rebate is really truly an extension of the legacy rebate and is going to operate in a similar fashion. So all other eligibility requirements under the legacy rebate and the new residential rental property rebate remains unchanged. Similar measures as to the first-time homebuyer, so the anti-avoidance measures that Angelo mentioned with respect to assignments, canceling contracts, entering into new contracts, that remains in effect for these new enhanced temporary housing rebates for individuals. So if there's going to be entering into new agreements, and I believe this was a question that was asked to us, due to a purchaser deciding not to continue on, and there is now an interest in getting into the agreement. I think really whether something falls within the anti-avoidance rules is going to be very fact-driven and fact-specific, and it's not just. And I think really what it turns on is the bona fide nature of the transaction. If contracts are being canceled or new ones being entered into for the purposes of getting into strictly as a tax motivated way to get into the rebate and to save some money, I think it might not necessarily be with a transaction that one would want to entertain. And I also think that just because of the sheer quantum and the nature of the assignment and the joint and several liability that these rebates create, builders need to be acutely aware that there are consequences for all parties involved, and that this might just not be a risk that it's worth the builder's worth accepting. So moving on, mechanics of the regulations. The regulations, as we mentioned, they're very confusing. Two different program administrators. The assignment, the builder is effectively going to credit both the 8% and the 5% upfront. However, the 5% is going to be credited back by Ontario, so it's not going to all come from CRA. CRA is going to credit the 8%, and then you have the assignment is permissible under both regulatory schemes. The more important thing here is that there are two forms. However, both forms go to the Canada Revenue Agency, who will then enter into when you complete the GST forms that are not yet available. There is a section that is with respect to information sharing with the province. And so you effectively have to check off that box. And that information, after CRA is processed, it gets sent over to the province, who then undertakes what I would presume is their own review of the information that is submitted. And then they process the rebate claim. So, I mean, one of the problems I think with the disjunctive process is that it might take a longer time to get an answer from Ontario. If one thinks that it might take a month for the Canada Revenue Agency to process the application and another month for Ontario, that's a 2-month delay or from start to finish in order for the rebates to be processed effectively. So some of the perceived issues that some of which I've already discussed. The two parallel regimes, builders will be out of pocket with respect to the 5% federal top-up. The two program administrators, I think one of the things that came to mind for me was it's unclear how audits will work. Given that CRA is taking the lead on the rebate program as it relates to at least the provincial 8%, and then sending the information over to Ontario, who then processes the 5%, it is likely that CRA is probably taking the lead on the process. So where CRA denies you the 8%, it would naturally follow as a matter of course that the 5% is going to be denied by the province. If the province even gets that information, I think that remains to be seen. I assume that it will be sent to ensure that there's a clean process. But the other thing is administration is going to be confusing and requires coordination between CRA and the Ministry of Finance. And that was alluded to when I was discussing the previous slide. It's unclear what the timelines are going to be for the administrators to process it. CRA is saying it's going to process these in a fairly timely manner, and Ontario is saying that they will make payments every month. But again, that still requires that the information get to the program administration team within a timely manner to effectively be processed and reviewed. So top up only paid out after the information is transmitted from CRA to the Ministry of Finance. So you can't assume that just because the information has been submitted that the two payments are going to be concurrent. There's always going to be a gap in time. Due to the administration delay in payments by Ontario, builders are likely to have to be out of pockets the 5%. And I think that's an important consideration, especially if you're entering into dozens of contracts with purchasers and closings are all happening contemporaneous. That 5% adds up very quickly, especially when we're dealing with millions of dollars. So possible challenge in disputing denied rebates. What I mean by this is the jurisdictional challenges. I would imagine it was going to be very complicated if some of these matters were to be litigated, but that is something that's to be seen, and this is just my speculation at this time. So notwithstanding delays in enactment, narrow window to enter into the agreement, so it's still only 1 year. It might be amended. I don't think there's any rumblings that we've heard in that regard, but I think it's still important to note that there's we're about halfway through the year, and so there's only it's a finite amount of time for us to enter into transactions with prospective purchasers. And as with the first-time home buyer rebate, need to be mindful of sunset provisions and undertake projects in a very timely manner. And due to the number of active rebates, builders are likely to require more than one agreement version. What we're seeing with some of our clients is is an agreement that specifically deals with the first-time home buyer rebates, in addition to the legacy rebate. And so that's one agreement. And then where it is very clear that the purchaser will not qualify for the first-time home buyer rebate, either by their own admission or the builder coming upon facts that just don't necessarily, are not necessarily conducive to that rebate being processed without significant scrutiny. Then you have a second agreement where you're dealing with the enhanced temporary housing rebates. And both of these agreements are going to come with their own sets of considerations with respect to indemnities and requirements. And so this is a costly endeavor for many of our clients. With respect to separate legal suites within the same unit or townhouse, careful consideration, consider order of occupancy. We've alluded to this in not just this presentation, but the previous presentation. It is becoming more common for builders to be incorporating either legal suites or marketing the ability of purchasers to rent out a component or a subset of the house. I think that marketing is important to ensure that the proper functioning and sales of the units, but the repercussion of this is that we need to ensure that the agreements are contemplating first occupancy by the individual purchaser or their relation. Failure to do this might end up in a loss of the rebate, and so careful drafting of the agreement is necessary in that regard. So going back to the new forms, the federal forms have not yet been released. The anticipated release date is mid to late July 2026. So again, in addition to the usual information that will be included in those forms, you'll also have to consent to share contact, banking, and rebate information with the Ontario government. And it should be within the same form as a checkbox, more than likely. And moving now to the investors and landlords, which I think is probably what many of you have come to this session for. Again, so this is the new subsections 47.3.1 to 3.3 of the regulations. It applies to persons generally, so this includes corporations and limited partnerships. It's not just limited to individuals. The core eligibility criteria here is slightly different than the individual rebate, and I'll highlight where that is, but to successfully claim this particular iteration of the enhanced temporary housing rebate, the purchaser must satisfy the baseline criteria 256.2, the complex type, so single unit residential complex or residential condominium unit. Again, on its face, this is not going to contemplate multiple unit residential complexes of any kind. Single unit residential complex would entertain and likely include, just because of the language of the previous enactments, homes that include a separate legal unit, assuming that the separate legal unit is deemed to be a second residential complex and not part and parcel of the same residential complex. But the definitions within the Act expressly contemplate that will be jointly a single unit residential complex, and I think that's consistent with the CRA guidance on that regard. Qualifying residential unit, so per 256.2 sub 1, the unit must first be occupied primarily as a place of residence by an individual under a continuous lease agreement lasting at least 1 year. Now, I know there's a lot of questions around this. We will address those again later in this presentation, but it suffices to say here that the qualifying residential unit expressly excludes Airbnb or other short-term tenancies or leases or licenses or similar arrangements of that kind. The other question that comes out of this is what happens when you enter into a lease agreement and your tenant leaves after 6 months? Well, we don't think that is particularly problematic to the functioning of the rebate. I think what becomes important, and it's very fact-specific exercise, but I think what becomes important is what is the use of the property after that tenant is left. If it's been converted to an Airbnb use, like one would expect that the rebate that you claimed at the time after the unit had been occupied is likely to be clawed back by the CRA, and that's something to be acutely aware of as well. But I don't think you lose access to the rebate by reason of a tenant deciding that after 6 months they no longer want to continue to occupy the residential unit. So purchaser status, also important. The purchaser must receive a taxable supply by way of sale from another person. I think that's really important words, and I'll explain why after. And must not be a builder of the complex for GST, HST purposes. Now, this particular requirement is interesting because I think it expressly contemplates perhaps builders who intend to convert the unsold housing supply into rentals for their own use. Now, by reason of this particular requirement, on its face, this would exclude those types of arrangements. And so, assuming that planning is possible, in order for the rebate to be taken advantage of by, let's say, by the builder, there might be some planning where there needs to be transactions between itself and another perhaps related corporation in order to get access to the rebate for these rentals. And so something to be mindful of. I think there's like this particular requirement also causes us some heartburn when we first looked at it because it does include the word builder. And so there were some considerations about around the self-supply rules, the definition of builder, and how it integrates into the new proposed rebate scheme here. So in terms of program timelines, this is introduced in subsection 47 3.1 of the amended GST HST regulations. So APS execution, same 1 year time period, so April 1st, 2026 to March 31st, 2027. Very important to keep that in mind. Construction commencement, also very important. So construction or substantial renovation of the complex must have begun on or before March 31st, 2026. And so this is where the rebate starts. This particular iteration of the rebate for the investor's landlord kind of takes a turn. And this is where I had referenced earlier on in our session, where it is very clear that one of the purposes of these particular rules is to allow the sale of existing housing supply, because this particular requirement is significantly different than the individual rebate that is available, but it is expressly contemplating the existing supply. And so if you had construction or substantial renovation on or after March 31st, so April 1st, 2026, that might not be supply for which this rebate would operate. And I think that's a really important thing for our builder clients, because I know that there are a number of projects that have probably been put on pause pending the enactment of this rebate. And I don't quite think that for investors, landlords, and our builder clients, that the construction commencement is conducive to extending it to these newer projects that occur after March 31st, 2026. And I think that's very clear from the wording of the regulations. So something to keep in mind. This is this specific iteration of the rebate. So for the rentals, for the landlords, the investors, this is specifically targeting the existing, already substantially completed, already constructed housing supply. So substantial completion. And then tax payable, final closing. So final closing, and I think this is, I think the final closing is really, really important here, because this is the requirement where tax is paid. And so this particular iteration of the rebate, the way that it's functioning is it's not just looking at the intention at the time of acquisition or entering into the agreement, but it's also looking at when tax is payable under the agreement. And so there is a timeline. So one could enter into agreement, meet all these other conditions, but the tax must be payable before January 1st, 2033 in order for the rebate to effectively operate. And I think that's really important and something that we should be mindful of as well. And returning back to the substantial completion on or before December 31st, 2029. So that is also a little different from the previous rebates. So these particular core eligibility criteria as found in 47.3.1, very important. We should keep our mind on this, but we should also be mindful of the complex type, the qualifying residential unit requirement, as well as the purchaser status requirements. So temporary enhanced new housing rebate continued. We're going to talk about the issues now. So as with the legacy rental rebate or the enhanced rental rebate, no assignment to builders are permitted. This is something that the purchaser must seek on their own. So for builder use of unsold new housing stock, as alluded to, builders cannot simply convert their unsold new housing stock into leases for their own use and hope to access this particular stream of the rebate. What needs to happen is there needs to be transactions that need to occur where there is a supply by the builder to another person to meet that requirement that I spoke about earlier. So interaction between the new rebate and the definition of builder and the self-supply provisions, I think this is a particularly important thing. And again, something that caused us a bit of heartburn was that the definition of builder is incredibly broad. And so one of the things that Angelo and I and our team here at Aird Berlis had to discuss was, well, if there's a transaction between the builder and a corporation, is the corporation a builder for the purposes of the act? And if so, they would presumably be excluded from this. Now, that's something that we've constantly been working on, and we've deeply examined the definition of builder and the self-supply provisions and how these all interact. All in this to say is that the rules do contemplate builder to corporate transactions. Corporation may or may not be a builder depending on how that definition applies to the set of facts and circumstances that were of the particular transaction. Where a builder is supplying it to another corporation, and that intention is to lease it to individuals for like a residential purpose, one would assume that the recipient wouldn't be within the definition of builder, and then the enhanced rebate should flow naturally so long as the other requirements are met. In terms of the interaction with the self-supply provisions, that is also really interesting. So as we all are painfully aware, generally where a registrant is purchasing property, they're going to self-assess. I think that one of the things that comes out of the two new rebate streams is how do you address the 8% and the 5%, given the disjunctive nature of the particular rebates that we're dealing with. And that's something that we should keep in mind when we're doing this, because the 5% is going to be invariably an out-of-pocket expense and something that we need to plan for accordingly. And so for bulk purchases, which I will return to in a minute, that those costs add up pretty quickly. Now, for bulk purchases, I promised I would address this. Bulk purchases are permitted by the rules. The rules, the new temporary enhanced new housing rebate rules, operate on a unit-by-unit basis. So you're not going to be precluded if you buy 6 or 60 units or just 1 unit. And that's something that is different from what we've seen in the past. So planning involving non-arm's length transfers, we would probably caution these sorts of transactions. We strongly encourage talking to tax professionals before you engage in certain transactions to benefit from the rebate. And by this, I mean if a builder is looking to convert some of the unsold housing supply, because even after the enactment of this rebate, there are a number of problems that come along with with selling the unit, just because then the sheer amount of supply that's available in the market, and they want to convert those to rentals. There might be some planning necessary to transfer these from the builder to another corporation. Now, where that other corporation is a non-arm's length a party, or you're not operating at arm's length, there are additional considerations. Section 155 of the Act deals with fair market value transactions between non-arm's length persons. So one of those points of caution would be that the transactions must happen at fair market value, pending the ability to sort of wiggle your way out of that particular rule. Now, in terms of other issues that we sort of foresee, the sunset clause might become problematic for a number of builders. So completion timing, timing of the tax payable on closing. The other thing would be, and not necessarily on this particular slide, the other thing would be builders who are now marketing newer projects, so projects happening April onwards, who are hoping to take advantage of the rebate. So going back to the eligibility criteria that we were identifying earlier. What I was talking about earlier was construction or substantial renovation begin before March 31st, 2026. I think this is going to be important to the marketing of newer projects. So if you're marketing a newer project, I think that is the requirement that you really have to turn your mind to ensure that you're not running foul of the rules. The other thing is anti-avoidance rules. So similar to discussed in the first-time home buyer in our previous sessions, we're going to need to be mindful of the types of assignments that are the types of agreements that are being canceled, what agreements are being re-entered. The other thing that we want to be mindful of is the nature of the assignments. Assignments by purchasers to other persons may raise an additional level of scrutiny that the builders now unfortunately have to sort of take the wheel on and verify and ensure, and that they're comfortable with assuming the risks associated with those transactions, just given the quantum of the rebate. When we were dealing with the $24,000 legacy rebate, I think it was one thing. $24,000 is still a lot of money, but much easier to digest than 130. So different timelines for individual stream and slightly different considerations for the landlord investor stream. I think that's important. We shouldn't assume when we're operating and we're navigating these rules that the rules have the same requirements. And I think the way that these rules have effectively been marketed and advertised, I think there is a level of that we're seeing. So depending on who we're dealing with, we need to ensure that the agreements are contemplating those particular transactions and not just necessarily assuming because it's a temporary enhanced rebate that the purchaser is relying on, that it's going to apply to all purchasers in the same manner and form. So the other issue that we see is no federal forms as of yet. Which has its own set of implications. Specifically, with no federal forms yet released, it makes it difficult, if not impossible, obviously, to take advantage of the rebates. Now, the advice that we're giving as a result of this is for closings to be delayed or wait for the release of the federal forms. I know that's not what most people want to hear. People want to hear that these transactions can proceed in a timely manner, but we don't think it's worth the risks associated with crediting a rebate and then after the fact, after closing, seeking the purchaser to assist with the assignment of the rebate where there's no forms. So the out-of-pocket 5%, we've talked about that a number of times. That is certainly an issue here and something that we should be considering as we sort of navigate these rules. So the operation of the temporary enhanced rebate, we have this here just so that you can see clearly how it operates. The slide is effectively no different than the one that we showed you earlier. The only real difference here is that it's applying to the enhanced temporary housing rebate. And now we'll move into takeaways from the builders. I'm going to turn it back to Angelo.
Thank you, Kyle. So, after hearing this, you're probably, as I was and as Kyle was when we were studying this and learning these rules, you feel like you were just put through a blender. And that's unfortunately, you're going to have to take this presentation and study them and take the rules and study them and spend some time with them to really understand and to digest and see how they actually will apply. And what I think and what Kyle think is that many mistakes are going to be made here, like a lot, because of the complexity. Um, you know, uh, it's unfortunate that it wasn't drafted in a simpler manner, like less hurdles to jump through, less timelines to navigate and worry about and have to track. But here we are. This is what it is. We can complain about it, or we can just say, like, look, this is the regime they put in place, and let's figure it out and try to make as few mistakes as we can. From what I see, that 5% top up is like it's a temporary cash flow hit to the investor. It's a temporary out-of-pocket expense. You need to manage it, especially in bulk purchases. Okay. Seen a couple of those firsthand. Um, with respect to closings, and Kyle alluded to this, we've been assured, or no, not assured, that's the wrong word, but we've been told that the final form should be ready mid to late July 2026. Okay, so it could be any day now this week. It could be the following week, the week after, might even extend beyond. But they mentioned the month of July, and so if it's possible, if you're going to try to credit the enhanced new housing rebate to your buyer, and you can, wait a couple of weeks, 3 weeks, I think that's the better course of action if that's what you're intending to do, if you want to credit the rebate. Better to have the forms in place and have the mechanism in place. I've heard anecdotally of certain buyer or builders sort of closing the deal and shouldering the risk of these rebates and saying, like, look, when it gets enacted, we'll come back and you undertake to execute the forms, right? But that's a risk. And in terms of qualifying for mortgages, like buyers, uh, they're like basically in order to qualify for the lower number, the lower purchase price, right? You'll want the buyer will want at least the agreement to show that the purchase price is inclusive of HST and that of all the rebates if they qualify for the temporary enhanced new housing rebate, because that means they have to qualify for a lower number for mortgage, and that's probably the point of this whole thing, right? So, uh, my view is certainly if you can hold off until the forms are in place, we're getting closer. Like, these rules were announced and a few months ago. We had to wait a bit, but we're close now. Um, and then this brings me, to the long-standing industry practice, right? You show the purchase price inclusive of HST net of the new housing rebate. Before it was just net of the standard rebate. What I'm seeing more and more, and Kyle has been getting, more and more as well. Initially, some clients maybe were a bit, reluctant to give the benefit of the rebate because they were like, well, it's a big risk. If they don't qualify, we're taking on sort of a big risk here. But I'm seeing more and more that builders are just accepting this is going to be the industry standard. It's still a risk to the builder though, right? Like you need to be aware that if the purchaser doesn't qualify for the rebate and the CRA thinks you ought to have known better, then, they may come knocking to you. So I just leave that out there. It's something you just need to live with. I think that's where we're heading. But it's something to be aware of. We can go to the next slide, Kyle. So what we've seen in practice, okay, so I've seen kitchen sink agreements that cover all potential contingencies with these rebates. But then, as Kyle alluded to, we've seen as well as some clients having like a form of agreement where someone may qualify for a first-time home buyer rebate, and then a form of agreement where someone will qualify for the enhanced rebate. Okay, or you can have different schedules, whatever. Like, and some people do it by way of schedules to the agreement. Not if you could take it back, Kyle, sorry. Uh, it's not that one is better than the other. It's really a matter of preference, but there's not one single one size fit all solution in terms of drafting. Um, so the one of the last points to discuss here is the interaction between the new rebates and the existing rules in the act. Okay, so a lot of builders with unsold inventory, have been calling and asking, what do you do? And can you just convert existing unsold inventory into rentals and benefit from the enhanced rebate, right? And I think Kyle mentioned that you really can't, based on our reading of the rules, anyways. Doesn't seem like you could do that. But there is potential planning depending on the facts that builders can consider. Um, you need to be careful to manage that those types of transactions to avoid land transfer tax and the like, but it's in certain fact patterns possible. I won't go into the details here, but I just wanted to mention that. One thing which everyone seems to be glossing over, but you need to keep this at the top of your head. There's a sunset rule for this rebate, okay? So construction needs to commence before a specific date and substantial completion before a specific date, okay? If it was for the individual purchasing for self-use, for own use, okay, or for their relations use. There's different, timelines for the investor rental rebate, right? You got to pay attention to those sunset provisions, because if you don't meet, for example, as a builder, you don't meet the condition that you started construction before a specific date, yet your agreement contemplates that the buyers are going to get this rebate. Just be mindful, you're going to have a lot of upset buyers if they think that they're going to qualify for this rebate, but they don't because construction didn't start in time. Okay? Because you know how things work, delays in terms of getting approvals from the municipality, and then construction can start beyond the cutoff date. Keep that in mind. Okay, again, careful drafting will help that, but you can't just assume you're going to start in time in all cases, especially when you're getting close to the end of the sunset period. One last point before continuing to questions is there is a trap provision here for the investors who are buying a rental units here, units to put out for rent, and that's 256.2 sub 10 of the Excise Tax Act. What that rule basically says is if you're buying a unit that you're going to rent out for a year or more, whatever, so you get the benefit of the rebate, the rental rebate. This provision says if you sell that unit within a year of the occupancy of that unit, the first occupancy, you need to pay that rebate back to the CRA, okay, with interest plus like 2% of the prescribed interest. It's like a pretty punitive rule. So anyone who's looking to avail themselves of the enhanced rental rebate, like let's say in the future the market turns favorably again, and you avail yourself of this rebate, take this into account, because this is I've seen this rule bite more than a few people. So it doesn't apply for purpose-built rental buildings, but it does apply for single unit residential condos or homes. Okay, so I just want to put that out there. And so with that, I think we've come to the end of our presentation. At this point, I will start, I guess, responding to some of the questions. We've received questions in advance of the presentation, in addition to a series of questions during the presentation. What I propose to do, subject to any comments or suggestions from Andrew, is that we'll start with some of the ones that were presented in writing first, because we've had
Sure.
a chance to look at that, and then we'll
Okay.
go through to the best of our ability as many of these
Yeah,
questions.
we won't get through all of them, but what I can do is I can read them out. I've flagged a couple that seem to have come up and are related, but if
Yeah.
there's specific questions, certainly let me know. And I mean, we are putting you guys on the spot, so if I ask you a question, you say no, we're not answering that today, that's fair, right? Because this is pretty
Yeah.
technical. So I guess
Perfect.
you did say this, but I think, as you said at the start, this is probably the most important takeaway. So, have all the HST first time home, all of the different programs
Yes.
and incentives been given royal assent?
Yes.
Okay, so they're all out there, they've all passed through. Perfect. The next one, and you heard this in March, and we're going to come back to it, is what will be considered HST eligible, like included in the discounts, and obviously the same questions we had as before. So we're talking about closing costs, adjustments, including but not limited to physical items like water meters, tree planting. What is this HST eligible if we want to go there?
So no change, same as before, same process as before. So the cost of the real property, including the upgrades, that is the HST, we'll say eligible component of the transaction. Everything else is over and above that. So like the cost of disbursements, legal fees, etc. That's just going to be part of the course and part of the normal routine and outside of the GST, HST rebate.
Right, right. I mean, on the statement of adjustments for those other adjustments, HST is charged, but it's not subsumed in the cost of the home itself, like for
Yeah.
the, right.
Perfect. And then we can get into, I liked the term. Sorry, I can't find it right here. So we're going to due diligence and we're going to look at anti-avoidance rules. And so that's obviously a very big topic, and you guys talked about it. So here's some new variations. So let's say somebody bought two houses from a builder. And let's say one was bought before the program and one was bought after the program. That purchaser goes to the bank and the bank says, hey, you know what? You're really only going to qualify for one mortgage. And so the purchaser says, okay, well, I'm going to cancel the first one that I bought before the programs because obviously, like, that doesn't make any sense. So what's a builder supposed to do?
Right. So here's my take on it. Uh, if the one that, the one that was entered into before the favorable rules are in place, if that agreement is terminated, presumably the builder keeps the rebate or the deposits, no? If usually that's
I
what
assume
happens.
so. That's the rules are the rules, right? So,
Right, right. So if that's what happens, as a matter of fact, and the buyer forfeited their deposits, that's a pretty good indication. Like it's I would have more of a concern if here's a concerning fact pattern, okay?
yeah.
You have buyer entering into agreement with builder, and then new rules are announced, and then magically, like, after the rules are in place, they enter into another agreement for another unit, okay, and the builder says, you know what, I'll let you I'll let you cancel your original deal and port over your deposits into this new one. That's a problem. That's like, okay, you're kind of like you're playing with the rules. But if the buyer legitimately forfeited their deposits, I mean, I can't
So it would
see
be
how
two
that's,
separate transactions. Any kind of porting
yeah.
or any kind of link between the two obviously gives
Yeah,
you heartburn.
that gives me a lot of heartburn. I don't like that.
Yeah,
I really don't like that. But look, I'm not going to make a blanket statement that it's all bad in all cases because, like, look, things happen. I'm the first to say I've seen it all. But there's
sure.
so many things every day I'm surprised. I'm like, okay, that I've never seen before. So, like, there's always a
Hmm.
variation of that fact pattern that can come out and be like, you know what? Although I said that was a bad news scenario, in this case, it's not a bad news scenario because of these mitigating factors. Okay, like, so I'm not going to make a blanket statement, but I'll say it's more problematic if the deposits are ported over into a new deal. But if the deposits are forfeited in the other one, that's usually an indicator those are bona fide deals or separate deals, and it's not done for
Hmm.
the primary purpose of the tax benefit. Because I mean, these deposits are pretty costly. I mean, for these deals, it's not like
Yes,
we're not
yes.
talking small dollars.
No, no. Just a variation of that assignment sale. So let's say the house was originally sold before the credit comes in or the HST rebate comes in, and then they call up and they say, I want to assign it. Does the person who it's getting assigned to get the credit because in theory they're buying it afterwards, or no?
assuming they qualify.
Yeah, they have to meet the
Yeah,
conditions.
assuming
Yeah.
like they would have met all of the rules if it wasn't an assignment sale. Would they still meet it?
Yeah, as long as the new purchaser, I think, meets the requirements of the rebate, they could benefit from the rebate. They wouldn't forfeit the rebate. I think it would be a little, I think it'd be a different scenario, and Angela, you can jump in if you disagree. I think it'd be different if perhaps they were persons not like, I don't know, maybe related or non-arm's length persons, maybe.
Sure. So if it was a cousin or a brother, then you're starting to get the heartburn again.
Not
But
necessarily, but I
okay.
think it's like fact specific, but I think generally if like the subsequent purchaser, like they shouldn't forfeit the right to the deposit. I think it would be different if the transaction was entered into, let's say, beforehand. I'd have to look through the rules to make sure I'm okay with an assignment of that kind. But if you're trying to circumvent the rules, I think that's where it becomes problematic.
Okay. Just going through the list again. So you guys did talk about how essentially they're separate credits. You've got the 24,000, we'll call it the legacy HST, and then you've either got the first time home buyer or the new HST credit. We did have questions on can you apply to both, or do you as the builder or they as the purchaser have to figure out which one to apply? I assume there's not pyramiding, so you can't get the first time and the new HST on the same house.
That's a good question. Hypothetically, you could have a situation where you think that you qualify for the first time home buyer rebate. And I don't think that's something we've talked about, Angelo, but then on closing you don't qualify for it, but you would qualify for the other one. I don't think you would necessarily pyramid. You wouldn't apply for the multiple rebates. I think you just apply for the one that is
Mhm.
the one that applies at the time
Does
that
the best.
Yeah.
yeah, and I think the administrative position on this sort of contemplates that. Like the CRA guidance expressly says that where there's a first-time homebuyer rebate and you would qualify for that, you could just apply for that. But if there's like any doubt that you would qualify for that, then you just apply for this. I don't think the CRAs or the Ontario government's going to come back and say, well, you applied for the wrong rebate. Like the effect of the rebate is all the same. So I think you apply for the one that applies at the time that you're applying for it, I guess.
Okay, and then not to simplify it too much, but you've got the existing 24. You're not getting the 130 in addition to the 24 that it
No.
goes to 130. And then I don't know if I'm saying it properly, but I've been led to believe the 130 is HSTable. So like that credit comes, but then there's HST on it. So the 130 is not really 130. It's 130 minus the 24.
No, no, no. So basically, think of it this way. You're getting no more of a rebate than the HST that you're paying, and it
Yes.
caps out at like units valued at $1 million. That's where it caps out. So mechanically, the way it works, again, we're getting into the mechanics here, is that the legacy rebate is always paid, and then if you qualify for the enhanced rebate, it's computed to back out that legacy rebate. The bottom line is you still get the full rebate, right? Like I don't want to confuse people too much, but if we're
Mhm.
getting into the nuts and bolts of it, that's the nuts and bolts of it. But
So
you
you're
can't,
getting both rebates, but the
yeah,
maximum, yeah. But it's not like you get the 24 plus the 130, right?
correct.
It's
You only
within
get
it.
130 max, right? Like that's
Yeah,
the takeaway. You're not double dipping.
absolutely.
You're not getting more
Okay.
money back than HST you're paying.
Okay, so back to the due diligence, we had a couple questions there. And so we had a builder reach out and they said they're getting audited or investigated by the CRA on first time home buyer. And so the question is, they went and they got a declaration. Now, it doesn't sound like this builder has a resolution or not. Is a declaration going to be enough? Like, do you have an opinion on how that investigation is going to go on the builder? And what else could a builder do? Because I obviously can't answer that. But what else could a builder do in addition to getting a declaration from that purchaser that they're a first-time home buyer? Like, what would due diligence look like? What's the best practices there?
I've faced this issue many times in the past. Okay, this was like we're talking 2012, 2013, 2014. I faced this issue a lot back then. And this is, of course, when shortly after Ontario harmonized, okay? So the numbers added up, and I think this became sort of a hot audit issue on the CRA's part. They started going after builders a lot for disallowed rebates. And uh, basically, part of the issue was, so part of the issue is builders have deeper pockets than these individuals, by and large, right? That's sort of I think part of what's motivating a lot of those was motivating a lot of those audits. But I think though that if you have a declaration, and this is with respect to the first time homebuyer rebate, if you have a sworn declaration or stat dec or whatever format you request from them, certifying that they are at least 18 years of age, and you can verify the 18 years of age part. Canadian citizen or permanent resident, you can verify that with getting the proper ID. And then neither they nor their spouse or common law partner, current common law spouse or partner, um, have ever over the past 4 years, occupied any home anywhere in the world. Then unless the builder knows, like for example, okay, this buyer bought another unit in the same building or whatever, made the same declaration, well, that's obvious, okay? Or if the builder became aware in their normal course, prep for occupancy closing that, they weren't going to meet the conditions because they're not occupying it. They put it out for rent or whatever. They learn that someone else is occupying the place. Well, that's a red flag, an obvious red flag. But absent any obvious red flags, what else is a builder to do? And like in my situations, I've had the CRA agree with me. Okay, in fairness to the CRA, like they saw the light at the end of the day, right?
Yeah.
But that's not to say you're not going to get questioned, and in some cases maybe assessed,
Sure.
unfortunately.
Okay. Thank you. Okay, so we're going to go into some of the ones online now. So we've answered this, but it's very important. So, do you qualify for the rebate? And you can talk to both. If a brother and sister are purchasing the property together, but only one of the sibling meets the qualification. So let's say the other sibling obviously had bought a place.
Right. So if the way the way that if for let's say we're talking about not the investor stream, we're talking about the occupancy stream in this case. Yeah, I've seen situations where like father enters into an agreement with daughter and daughter's
Mhm.
going to live in the place. That's fine. Nothing changes in that regard.
So you need one. You need one person to
Yeah,
qualify. Okay.
yeah, because
Perfect.
if you think about it from
Unless you're married, that changes it.
right, well, from each
Or
person's
common.
perspective, think of it this
Yeah.
way. It has to be for themselves or for a relation. Well, from the daughter's
Yes.
perspective, it's herself. From father's perspective, it's his relation being his daughter. So each technically qualifies. But there is a rule that says, because they changed the legislation, there was an unfortunate set of case law where it's like someone was on title for the purpose of like, qualifying for mortgage financing. And then unfortunately, the cases went against these individuals, even though they otherwise qualified for the rebate. It was just so then I think legislatively they amended that back in the day to allow for more flexibility in that regard. So that should be okay, provided again they meet the conditions.
Okay. So the next question up is a technical one. So maybe I'll leave it to you, Kyle, if you want to answer it. If not, it's from our good friends at Martino. Send me an email and we'll follow up with the speakers afterwards, but it's a bit technical to ask live. So if you can answer it, great. If not, that's okay. The next one would be so the buyers are offering builders to assign the total 13%, which means the builder will be financing the 5% of the HST amount till the time the CRA reimburses the builder back. This is really a financing. That's essentially it, right? Like you either wait, so either the builder does it or the purchaser does it, and whoever is doing it is obviously on the hook until the money shows up.
Yep.
Okay. Now, banks. So if the purchaser, the buyer, is going to apply to the rebate, is there any feedback from the banks? So let's say I'm going to close, the mortgage is $800,000 or whatever it is. I'm going to get round numbers. I know it's not exact, $100,000. Are the banks saying, okay, we'll create a mechanism so that your mortgage can go from 700 to 800,000, or you signed a deal and the deal is the deal kind of thing. Or you say, I'm not a finance guy, go talk to a finance guy, Andrew. I'm a tax lawyer.
Yeah, here's the thing. We don't know what the banks on, and I'm gonna say like, look, we stay in our lane, right? Like we don't know what the banks are practically speaking requiring in the circumstances because, well, number one, if the forms aren't fully there and the assignment is not fully in place, like my high level comment is I don't see how it would be any different mechanically from the old days when the purchase price was inclusive of HST, net of the 24K rebate, right? The bank presumably lent on what the contract price would be. Then you had situations, of course, where the builder or the buyer rather doesn't qualify for the 24K rebate. They got to come up with an additional 24K on closing, right? I don't know how they come up with an additional 24K. Presumably is what causes all the heartburn. They qualified for a mortgage of X dollars. Now they got to come up with 24K more. And they ask the bank, hey, can you raise it by 24K? And the bank tells them like take a hike some cases, or they have to come up with the money themselves otherwise, right? Like I imagine it will be the same situation, just amplified now, because now you're going to have situations where before closing, maybe you realize they don't qualify because the buyers do something incredibly stupid, like say they're going to live in a place and then they market it for rent before closing, right? Like, and so then you have a situation where maybe they'll get the rental rebate, the landlord rebate, right? But there's a cash flow problem. They got to pay at closing the additional component, which was otherwise credited to the builder. So,
Yeah.
again, I'm not a finance person, but I imagine it's probably the same issue, just amplified.
Okay, and so we've got time for one more question, and then we'll bring Rich in to do the closing. And so it's, can Angelo please repeat his recommendation on contracts? And then it has in brackets, show purchase price on contracts inclusive of HST and net of applicable rebates. Not sure that they understand, but I guess
Yeah.
like kind of, what's your final thoughts on all of this? What do you want to leave the
My
members
final
with
thoughts
there?
are we're going to be in a race to the bottom. And I don't mean like to the bottom in a bad way, right? Like, but it's the expression, a race to the bottom, right? You have all these builders out here who have, unsold inventory and they want to sell. I hear it all the time. Like that's the thing. I hear it all the time. Everyone wants to sell and move their inventory. So what are they going to do? They're going to be as flexible and as accommodating as they can to buyers. I've had builders who are very, very conservative and say, no, I will never, and then come back to me a month later. Yes, yes, I will do it now. Because I'm hearing that
Sure.
they won't even do the deal or talk to me unless I do it. Okay, so I think that's what's going to happen. I don't see how we don't end up in that scenario because like with the temporary rebates, besides the complexity of it, they've made it incredibly easy for a buyer to get to credit it to the builder, really, at the end of it. Like it's just a couple forms. The complexity behind it's a mess, but they've really made it incredibly easy, cash flow issues aside, right? Um, so I'd imagine that that's going to be sort of what the industry ends up doing. I don't think you're going to have many scenarios. Rare, I think, is the builder who's going to say, nope, we're not going to, buyer, you apply yourself. I mean, that's still an
Mhm.
option. That's not what I'm hearing, not what I'm seeing.
Okay, and with that, we're going to bring Rich back up to do closings. And just thank you both. This was an incredible webinar, so thank you very much for your time.
Indeed. Thanks. Yeah, there's, as they say, the devil's in the details, and there's longer term considerations here. The housing supply targets that have been set by government are still remain a long way off from being hit. The reality is that taxes on new housing in Ontario still far exceed any other jurisdiction in North America. That remains a problem longer term. And, we need new housing to compete. And it's so important. It's central to, it's the most important thing that people spend money on. So ultimately, I think, we're going to have to convert these temporary rebates into permanent cuts. I don't see any way around it, and we'll be working on that. So stay tuned. Want to thank Andrew and Kyle and Angelo for a great presentation. Of course, Meredith in the background. And that's it for now. So appreciate you being here. Ciao.
Our pleasure.